What's going on, guys? It's Andy here. Welcome back to another episode on the Andy Kandola Show. So in today's video, I want to go ahead and share with you guys the 3 stocks that I've been aggressively buying during this pandemic. Now, personally, I love all 3 of these stocks. These are going to be stocks that I'm basically looking to hold on to for the next 20 to 25 years. Now, if you are new to this channel, I focus on dividend-based stocks. These are going to be all value stocks that I believe are going to grow at least by 1,000% in the next 20 years. Now, that's an average return of about 50% each year. So I am going all in on all 3 of these stocks. Now, additionally, I do have many stocks in the portfolio. I'll go ahead and run through my portfolio as well later in the video here, but now let's go ahead and jump right into it. Now, the first stock that I'm basically looking to hold on to, and this stock has been in the news a lot lately, and that's gonna be Apple. Now guys, I personally really like Apple because Apple has this ecosystem that goes ahead and sucks you in, and basically once you start using one of their products, you basically just cannot get out. Now Apple did recently announce that they're gonna have a 4-to-1 split on their stock price, and that's gonna be happening near the end of this month. But based on that, I do see the stock climbing back to new highs, and that's because a lot of traders that are basically day trading or that are trading options or futures, when you have to have 100 contracts or 100 shares of a stock, it's going to be much easier to go ahead and invest in the stock. And I believe this is just overall good for Apple to go ahead and bring new investors into their company. So with Apple, they're currently trading at $458 right now. And if we just look overall at the last 5 days, Apple has been hitting new highs. I mean, just in the last week here, they hit a new high of $462, and Apple is actually on the verge of becoming the first $2 trillion company. As we can tell here, guys, the market cap for this company is $1.96 trillion, so they're extremely close. I believe once they hit $468 per share, they're officially going to be the first $2 trillion company. So let's go ahead and see if that happens, and I do see it happening. But at the same time, I think the stock is getting overvalued at this point because of the PE ratio. Now, the price to earnings ratio, basically you're investing in the stock at 35 times their earnings. Now, that's a pretty high ratio for the tech sector, and usually stocks that are over 20% are usually considered overvalued. So I do believe that this stock is currently overvalued. But hey, with a company like Apple, it's just hard to tell because I think it has a lot of support behind it, and just with their overall fundamentals and as a value stock that pays out a dividend, it's just hard to tell where it is actually gonna go. But I really do like this company because Apple does also pay out a dividend as well. Now, Apple's dividend is quite low. It's a 0.72% dividend yield, but at the same time, when we look at the compound effect of having that dividend and just reinvesting that over time, I personally do like that because they're one of the few companies in the tech sector that pays out a dividend. Now, in regards to their dividend, they've been growing their dividend consistently for the last 8 years. Apple actually just recently started paying out their dividends, and in the last 5 years, they've been growing it by an average of 10% per year. So this is all really good stuff in regards to Apple. Now, in my current portfolio, I do have the stock within my technology sector, and this is a stock that I've basically been loading up on. In regards to Apple, if we look at the overall all-time, I am up 71% in the stock, or $1,813.30, and this is one of my biggest holdings in my portfolio. So I have about $6,312 in the overall value in this particular stock. Now let's go ahead and jump into the next stock here, and the second stock that's in my bucket list portfolio that I'm basically loading up on is going to be Realty Income Corporation. Now, Realty Income Corporation, within a dividends-based portfolio, this is basically one of those stocks that as a dividend-based investor, a lot of people are familiar with. Now, Realty Income Corporation is a REIT, which basically means it's a real estate investment trust. Now, with a real estate investment trust, these are basically companies that own real estate. So by investing in a real estate investment trust type of company, you're actually investing in the stock and becoming a part owner of this company. But when this company goes ahead and collects rent and has revenue, they do have to go ahead and pay 90% of its revenue to its shareholders. So I really do like investing in real estate investment trust, and one of my favorite companies is going to be Realty Income. Now, Realty Income is more on the retail side, and they basically are one of the largest landlords out there that has long-term leases with companies like Walmart, with 7-Elevens, with Walgreens. So they have a lot of top quality tenants under their belt. Now, with Realty Income Corporation, Corporation in the last 1 year, because of this pandemic, they are down. So they're down about 14.87%. But if you look at the overall last 5 years, they're up 29%, and then overall 10 years, they're up 87%. Now, one thing I do want to share with you guys here is if we just looked at the overall 1 year, the stock was priced at right around $80 per share, and right now they're trading at right around $60. So I do see in the next 2 to 3 years the stock going back up to that $80, and then eventually they're just going to keep climbing. Now, in regards to the stock, I am expecting Realty Income to go ahead and hit over $100 in the next 5 years, because with land, there's basically a limited amount of land, and with a company like Realty Income, they do have very strong fundamentals, and they've just been tested over and over. Now, if we just look at their dividends, with Realty Income Corporation, they're actually paying a dividend yield of 4.52%. Now, in regards to this type of dividend yield, this is a pretty high dividend yield, even considering the REITs out there, because this is one of the safer REITs in my opinion. Now, additionally, they are considered a dividend aristocrat. Basically, what that means is that this company has been growing their dividends and has been paying their dividends for over 25 years. And in Realty Income's case, they've actually been paying their dividends for the last 26 years. So this is a stock that I'm basically looking to hold on to for a long period of time. And if we just go over to my current portfolio, within my real estate sector, I do invest pretty heavily in Realty Income Corporation. And all time, I am up 19% on the stock. So I'm happy with that overall return. And I'm up $609.84. And as far as the total value of the stock in the portfolio, it's $5,503. So guys, this is one of my favorite stocks within the real estate sector. Now next, let's go ahead and jump into the third stock. And the third stock that I've been holding on to, and this is a stock that I do believe in because just the overall diversification of this company, I'm actually seeing that grow pretty aggressively. And like I said, with all three of these stocks, I'm seeing at least 1,000% return in the next 20 years. So I see all three of these companies growing at a really aggressive rate. So the next one is gonna be Walt Disney. Now with Walt Disney Company, this is a stock that's extremely diversified. Now with Disney, within their portfolio, they're diversified in theme parks. But one thing that you may not know is this is actually considered a communications company, and that's because Walt Disney actually owns ESPN, and they're huge into the movie sector, so they make a lot of different movies. And one of the things that I believe Walt Disney is actually doing a very good job with is their video streaming service. Now Walt Disney is actually considered the second largest streaming service out there, because with Disney Plus, they actually have over 50 million subscribers globally, and they're actually considered the second largest video streaming company in the world. So as more and more companies are going more towards streaming services, because movie theaters are currently shut down and we actually don't know what's going to happen with the overall movie industry. But with Disney, they're actually in a very competitive and a very good spot, because they already have a great platform and they already have great content with different franchises like Marvel, Star Wars, Pixar. So I don't see this company going anywhere anytime soon, and I do see them growing aggressively within the video streaming sector. Now this sector I currently do believe is a bit undervalued at this point, because I don't think a lot of people see the overall potential with this sector. And a lot of us are familiar with Netflix, but as far as with Disney Plus or with some of the other platforms out there like Amazon Prime or like Hulu or Apple Plus, I believe this whole sector of video streaming is just going to keep on climbing. And I do personally see a huge growth potential within the streaming sector. Now with Disney, I don't actually have this in my bucket list portfolio because Disney is a stock that actually cut their dividends, but I do have this in my retirement portfolio. So if we look in my retirement portfolio here, as far as a growth stock goes, Disney is one of my holdings, and I currently am up 3% in this stock. But my overall strategy with Disney is going to be to go ahead and start investing more heavily in the stock, because I do believe within the next year here, they are going to go ahead and bring back their dividends. And if we just think about it overall in the next 20 years, this company is basically a no-brainer no-brainer to go ahead and invest in. Now, additionally, guys, I want to go ahead and give you guys an update in regards to this portfolio. Now, in regards to the bucket list portfolio, this is basically my dividend-based portfolio. I will go ahead and leave a link down in the description if you guys want to go ahead and see all the different stocks I have in this portfolio. But right now, I have about 52 stocks in the portfolio. And just to share with you guys the overall gains in this portfolio, in the last day, I am up $234 in the portfolio, or 0.45%. In the last week, guys, I'm up $373 or 0.72%. In the last month, I'm up $2,686 or 5.59%. In the last quarter, I'm up about $5,987 or 16%. And if we just look overall, I'm up $5,786 or 19.72%. And just to share with you guys some of the trades that I'm actually making in this portfolio right now is I am buying 4 stocks. And the 4 stocks that I'm currently buying is I'm buying 2 stocks within the banking sector, because within the banking sector, just in the last week here, with Warren Buffett basically eliminating some of the bank stocks and selling off JP Morgan Chase within his Berkshire Hathaway portfolio, JP Morgan Chase and Bank of America actually took a hit as far as their stock price goes. So these 2 stocks I'm just investing in because the stock price went down. And additionally, I am investing in Realty Income and Apple. Now, I like to go ahead and dollar cost average in this portfolio, guys. That's just my overall strategy. I'm investing anywhere between $600 to $1,000 a week. I am going a bit aggressive on this portfolio because my goal is to get this portfolio to $100,000 before the end of the year. We'll see if that happens, but at the same time, I'm just going to keep investing, and hopefully the market just keeps going up and up, and we can go ahead and get to that $100,000 mark. But guys, that's basically going to be it for this video. These are going to be the 3 stocks that I'm basically looking to go ahead and hold on to long term, and I am expecting a huge return from every single one of these stocks. Obviously, as a short-term investor, invest at your own risk. I do have a new series also that I did start on this channel. If you're interested in me reviewing your portfolio, if you want to go ahead and share that with me, I will have my email down in the description, and basically give me a quick heads up as far as what your goals are. This is a new series that I've started on the channel because I do believe seeing different portfolios does help the overall community, and I personally like seeing other portfolios because there's always so much knowledge to go ahead and get out of the different stocks and the different ways people invest. So go ahead and check out my description if you're interested in that. And then additionally, guys, if you are interested in M1 Finance, I do have an affiliate link where you can go ahead and get $10 if you go ahead and set up an account with M1 Finance. But thank you guys for watching this video. If you like videos like this, don't forget to hit that like button, as it really does help push this video in front of more people. But thank you guys for watching. I will see you guys at the next one.